just coming out of a trade, heading into, well, we're well into the East Coast lunch hour, and so I figured, you know what, this Friday, done trade, and let's make a video. So, in the previous video in this series, we discussed moving averages. We also mentioned that they sometimes act as an area of support or resistance. I also alluded to certain price levels having a strong psychological impact on the market. So in this video, we're going to go deeper into this topic of support and resistance. So to do that, let's bring up SPY on our chart, and let's just go straight for the monthly time frame. We'll just hit auto here. And then over here, I'm going to go ahead and hide my indicator. And then I'm going to come up here and I'm going to change this to a line chart. So I hope you followed along with me on this. This is quite a change of scenery from what we normally see. Line charts are basically a plot of the closing price at the end of the period. So this means we are looking at a plot of monthly closing prices for the ETF known as SPY. Alrighty, so as we look at this chart, we can see some useful information. I'm going to come over here, make sure that the magnet tool is on, and then I'm going to come over here and grab my horizontal line tool. Alright, so let's begin this discussion by coming over here and just placing a line at that 2018 low. Alright, so you can see how the March 2020 low came close, not quite there. This introduces a couple of things. The first thing it introduces is this concept of support. So price came down here, reacted strongly, came back down to that area, and then reacted strongly and continued rising up. All right, so the area, or that concept of support, an area in which price holds, it's like a floor or a foundation, or just a support, if you will. Okay, and the second concept is this idea of support levels not being a hard, fast number. So like we have 249.92 here, but more or less thinking of them as kind of a zone, an area, as opposed to a strong, hard, fast number. You could think of it maybe as a bodyguard or a bouncer that either has a strong cologne or a strong body odor. You know, if you can smell that guy, you're probably within his sphere of influence and you're going to act accordingly. And that's a way that we can conceptualize these areas of support. Resistance can also work in a very similar fashion. And then also, you can see here, if we switch to normal candles, you kind of get a different view here. You can see that price action did indeed intersect. So we'll go back to our line chart. The reason why I like using line charts is it just gives me some very clear closing prices, you know, and then I just recognize that it's going to be an area. All right, so let's add a couple more areas of support on our chart. We could see this one here. That's pretty obvious that price came back down, touched it, and boom, it's off. More recently, you can see this one here. Again, price comes down and boom, it's off to the races. All right, so pretty easy to see support levels. And on the flip side of things, we can talk about resistance. So we've found where price, you know, finds a floor and continues going up. What about when it finds a ceiling and starts going down? Well, let's begin by just placing that on the most recent all-time high. You can see again, we hit that and boom, down we go. You can see more recently we hit this level, and again, look what happened. We went down, and so we found a little struggle here. We lost it. We came back up and tried again, lost it. So this level here, I would say, is quite significant. And you can see today, again, we are in that zone. All right, so this is resistance. And again, resistance is best thought of as, you know, a area as opposed to these exact numbers. All right, so let's look back a little bit further. Can we see anything else? Yeah, right here. We can see here, if we look back in this 2015 area, again, We found that ceiling, bumped our heads against it several times for quite some time, actually. And again, it functioned as resistance, and then price ultimately broke through and went up. And we can see here, when it did break through, it came back down, and this resistance flipped into becoming support, and then the price launched. Okay, so oftentimes areas of resistance, when they do get broken, can establish themselves as new support. So again, you see the significance here. It took quite a significant amount of time to break through that level. We retraced to that level, retested it, and off we go. And these retests are important things to look out for. They don't always hold. So just because something broke out of this level doesn't mean that it held. And again, if you switch to your normal candles, you can see that the wicks went above this level several times, and there was more downside to be had here. And so if you got bullish because, oh, we're breaking through this level, like right here, you know, you had some downside ahead. All right, so again, going long on the retest, you could see how price came up, came down, retested. Waiting for that confirmation to see this happen is a good thing to do. Instead of getting too bullish and getting trapped here, this could be a form of what is oftentimes called a bull trap. Okay, so that's kind of an interesting thing. Also, while we're here, you'll notice this wick during that COVID crash. It came pretty darn close to here, and maybe even more significantly, it came to where we kind of ran into a hiccup. You can see a similar thing if you come over here. So you can see here, when we came down, we came into this level that we spent a lot of time beating our heads up against. All right, so that is something to look out for as you are hopefully doing your homework on this video. So what I want you to do is I want you to go to these monthly charts. I want you to plot out some areas of monthly significance of support as well as resistance, and then look for how wicks oftentimes will come down and touch. You can see this one again had a little hiccup in there, came right down to it and launched. All right, this is a whole nother can of worms, and it is a can of worms or a rabbit hole that I definitely want you to dive down into. Alrighty, so again, going back to that line chart, we can see how this looks there. Alrighty, so you can also go further back in time and you can find more examples. Sometimes things can play out for quite a while. And so like if we were to place an area here, a line here, notice how long this area became significant. It was resistance. We broke through that resistance, really didn't retest it until down in here. And you can see here, we bounced off. It looked like it was going to become support. But again, it fell through. And once it fell through, you could see it became resistance. We had a lot more downside. Again, it comes up. It's resistance. Now it flips to support. And you know, a lot of people here probably thought we would never see these levels. But again, you know, history as you know it had something different to think and to say. And again, you see the significance here, and it flipped to being support. And we really haven't looked back. I hope, I hope we'll never see that level. But I tell you what, it is not out of the water. A lot of people told me I was nuts for setting limit orders in some of the areas I set here. A lot of people thought we would never get down to these levels again. You know, when we were back here talking about things, I'm telling you, nothing's ever off the table. Take these monthly levels seriously and keep your head on a swivel. Definitely pay attention to, you know, macroeconomic factors. I hope we'll never get to those levels, but I can't say we won't. That being said, obviously right now we are in an uptrend, and I tend to be a little more bullish When I see this kind of action, of course, here I'm being cautious. If you were astute and you looked at the ticker that I started the chart with, you can tell I was playing a little bit on the short side this morning. Because again, you want to long off a support and you want to short resistance. But you do have to be careful in both cases. You want to recognize, again, think of that bodyguard that's got some sort of an odor to him. If you can smell him, you're within his sphere of influence. And it's the same thing here. You know, that price can come up and maybe test here. And, you know, if I didn't have proper risk management here, you know, I might panic and get out of my short, and then, you know, things might come down. So you have to be smart about this. You have to be careful, adjust your position size accordingly. These are all things that I do, and these are all things that I would encourage you to look into deeper as you back test your own strategies. All right, so I kind of rambled there. What about areas of psychological significance? I alluded to that in my previous video. Well, oftentimes multiples of 5, 10, 100, etc. tend to be pretty strong. So if you look over here, you can see this 400 level. Man, I mean, we spent some time in that 400 level here. It seemed like we would never break out of this. That 400 level was very strong resistance, and you can see once it was breached, it became, you know, pretty nice support. We haven't even come down to that. You can see when we did come down, though, where did we rest? Kind of in that 420-ish level. And again, you got to think about those numbers as zones and less as hard, fast numbers. All right, when you're on smaller time frames, look for multiples of 25 cents, dollar increments. Those can all be significant. If you're trading forex, obviously cent increments are very important. Also look across multiple time frames to get a better idea of what I'm talking about. So again, that's going to be part of your homework assignment. All right, so when I began this conversation, we went right to the monthly chart. Why is that? Well, the way I look at things, and the market will bear this out, backtesting will bear this out, but you can look at the support and resistance levels on the time frame you're on kind of as you would look at cement. All right, if you just freshly poured cement, you're not going to step in it. Your feet are going to go right through. You know, you let it set up for a few minutes, sometimes a few hours, and you can go over there and you can leave a handprint, or you can get your dog in there and have him leave his paw print in there. You know, you're not going to sink all the way through. If you're wanting to build something that's going to stand up to a lot of abuse, you know, you're actually going to keep it, you know, misted. You're going to cover it. You're going to try to keep that hydrated. You might let it sit in those conditions for a month or more. And as that happens, it just solidifies. It becomes stronger and harder and tougher. You know, I'm not a concrete expert, and so if you are, you know, feel free to correct me there. But the gist of those ideas holds true. And, you know, the market is in a very similar way. Something that's significant on a monthly time frame, it holds a lot more credence than something that would be over here on the 15-second time frame. All right, so keep that in mind. The higher the time frame, the tougher the support and resistance levels tend to be. If you're on small time frames, you know, they don't really hold up. But that isn't to say these levels can't be broken. They certainly can. All right, so you might have thought, you know, that this level here couldn't be broken. You know, things were good back then. We came down here, came close, didn't even touch it, and off to the races we go. A lot of people didn't think we would ever see prices going below 420 on SPY or the 4,200 level-ish, you know, on the underlying S&P 500. But, you know, it did. It happened, and we spent a significant amount of time, not just there, but much lower. All right, so as with cement, if you have the right hammer and you go to work at it, you're going to chip through that cement. Same thing here. You know, when you raise interest rates after they've been held at 0.25% for almost a solid decade, you know, something's going to give, something's going to break. And you might find some of those levels you thought were significant before weren't so significant. So keep that in mind. Always keep geopolitical events. So we've talking about, interest rates, but think of other things, things like war, things like disease, etc. Okay, all of those things can play a part in what the market ultimately does and how well these levels actually hold up. All right, so don't get married to these levels. Again, higher time frames tend to have more significance. You can see here, looking at it on a daily, these monthly time frames had some significant levels. You can identify a ton of levels on the daily and weekly time frames. If you do, I strongly suggest considering color coding them. Have one color for monthly, one color for weekly, one color for daily. I generally don't give anything under a daily time frame much significance. I will plot that if I'm actively trading, but again, that's, you got to keep in mind what's on smaller time frames. It's kind of like a boat. It's really easy to turn a small boat. You can barely sneeze and you're tipped out of a canoe. Versus, one of these giant aircraft carriers. It takes a lot to stop an aircraft carrier. It takes a lot to turn an aircraft carrier, and you can think of time frames in a very similar fashion. All right, so I guess one last thing that we could talk about in this video is using volume. And so if I click this technical for volume, I add a plot of volume to the chart, and you can see that oftentimes when these areas get touched, you see spikes in volume. You see a spike here, you see some spiking in here as we're fighting resistance, finding support here. Look for volume. Volume also can give strong significance to a level. What's interesting, and I'll just throw this out here, you can read into it what you will, but is the relative lack of volume during this pullback. Not a ton of volume. So that could be significant. So look into volume. We'll talk more about that. In a recent knowledge base article, I did discuss VWAP, volume weighted average pricing, and we kind of touched on volume there. I'm touching on it here. But volume can be another thing of gauging how strong a certain area is. The more people that believe in this area, you're going to see that volume spike, and it's going to give greater significance to these levels. All right, so pay attention to volume. We'll delve into that more as our discussion evolves. All right, so I've gotten through the points I wanted to make in this video. I hope you'll head on to the knowledge base article that will be linked in the video description for more information, and we'll see you in the next one.